In this video, I'm going to talk about 7 mistakes that you might be making on the Paycheck Protection Program second draw application. Now, I'm going to use the application and I'm also going to use the SBA's website with their facts and questions, which will help you make sure that you're not making these mistakes. But I'm going to point them out, and I'm also going to talk about an 8th mistake that really hasn't been answered, so that's why I wanted to put it at the end and kind of hold it separate. But it is a question that I've gotten several times, and I want to talk a little bit more about it. But before we get into this, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. All right, so I'm going to go ahead and pull it up on the screen with the application and the FAQs from the SBA's website. Now I'm going to put both links in the description at the bottom so you can follow along or read them in a little bit more detail. So let's go ahead and pull them up on the screen. So here is the Paycheck Protection Program second draw application. And most of it is straightforward. Now, for the things that are different, that's what we're going to talk about today with the mistakes that you might be making. So I'm going to jump over to the SBA's document that is for what documents that you need to provide, but there's a handful of sections in here. So we're going to start with mistake number 1. Now, mistake number 1, you can get right from question number 1. Now, what they're pointing out here is how you're doing the reduction in your gross receipts. So in order to qualify for the second draw, you need to demonstrate and show that you have a 25% reduction in your gross receipts. Now, here's the definition of the gross receipts, but what I want you to pay attention to is how you're doing the accounting, because it's very easy to look at your gross receipts and realize maybe you're really close, and then taking one of those receipts and moving it to a different quarter because you said, you know what, we got this, but it really didn't count for this quarter. But what matters is how you're doing the accounting, and it says it right here. So it says in accordance with the entity's accounting method, accrual or cash. Cash is when you receive the money, is when it's accounted for. Accrual is when you've earned the money. So what we want to do is take a look at your Schedule C. If you're a Schedule C filer, this is where you can find it. One of the questions that you've answered previously on a previous tax return was either cash or accrual. So make sure that you're looking at this and applying that same accounting method when you're trying to figure out your reduction, if you're not using something like QuickBooks. So that's cash versus accrual. And that's a huge mistake, which could cost you getting forgiveness later on down the road, and obviously a huge surprise. So you want to make sure that you're doing this math correctly the first time so you don't have that kind of a surprise. Now for mistake number 2, we're going to be talking about refunds, and it is on the same page. So the refunds we're going to look at, and it's pointing it out. What counts is that you can take out any of the refunds. So it's anything that you've earned or anything that's coming into your account minus any contributions or money that wasn't actually income. Maybe it's coming from another business account and you're just doing a transfer. So look out for those as well if you made a mistake. But you want to make sure that you're reduced by the returns and allowances, but excluding net capital gains and losses. So make sure that you're going through it and looking for those returns and subtracting those from your gross receipts. Now, there's a couple of other nuances that you want to take a look at. And this is where I think the reduction in gross receipts could get a little confusing, because there are some businesses out there that are still struggling that might feel like they qualify, but in actuality, they don't, because their gross receipts weren't reduced. And there seems to be some sort of a difference, as you can see right here, for the travel agencies, the real estate agents, advertising agents. These are handled a little bit differently than all of the other businesses. So for example, let's say you brought on some independent contractors that are now doing some more work for you, or you brought on some more staff, so they're doing more work for you, but possibly at lower margins. So that means maybe your gross receipts are actually a little bit higher in 2020 than they were in 2019, but your margins are down. So it's possible that your overall business could be down, but your gross receipts are not. So your profitability is not there. And unfortunately, you're not going to qualify for the second draw of the PPP program if you can't demonstrate that 25% reduction. So again, looking at what accounts for the cash versus the accrual and the refund. So that's the first two mistakes that I wanted to point out. Number 3 is going to be the EIDL or the PPP, and this does not count. So this is going to be on page 2. So the PPP was outlined, if I can find it right in here, it says the amount of any forgiven first draw PPP loan or EIDL advance, which are not subject to federal income tax, is not included in the calculation of gross receipts. Most people probably realize that, but if you didn't, go back in there and make sure that does not count for gross receipts into your account. So that will not spike your 2020 or 2020 numbers versus the 2019 numbers. So could possibly still keep those 2019 numbers higher, at least by 25% than the 2020 numbers. So the PPP first draw and the EIDL does not count towards gross receipts. Of course, any deposits don't count either. So you want to make sure that you're doing that correctly. Number 4 on the mistake list is the time frame and using the correct time frame. There's 2 places that you can use this for, and that's going to be on page 3 of this application. There are 4 bullets here. Now, even if you're not looking at this document here, it's also in the instructions on the application. And if we scroll down, I believe it's on the instructions here, and you can see these 4 bullet points. So if you were in business all of 2019, then you can either use all of 2019 versus 2020 or choose any correlating quarter. So if it's quarter 1 of 2019, you have to use quarter 1 of 2020, and that's how you're going to do the math. So you're going to take the gross receipts of 2019, and then you're going to subtract it from the 2020 numbers. Then that number you're going to divide by the 2019 numbers. So I'm going to say that again. You're going to take quarter 1 of 2019. If you're using quarter 1, you're going to take quarter 1 of 2019, subtract quarter 1 of 2020, that answer, that number, then you're going to divide that by the bigger number, which is going to be your 2020 quarter 1. And that has to be 25% or more in order to qualify for the second draw of the PPP. But that's just for qualifications. That is not how you're going to get to the math. So that's just, okay, you can be in the program, you qualify. You can use any quarter that you want if you're in business for the entire 2019 and obviously 2020 and moving forward. You still have to be in business. If you weren't in business, you can use other quarters. For example, in this 4th bullet, I'm going to switch back over to here. In this 4th bullet, if you were in operation on February 15th, you can use quarter 1, 2, or 3 compared to the 4th quarter of 2020. So all those quarters in comparison were for 2020, and that's if you weren't in business during 2019. So there are slight nuances to which quarters that you can use, but if you're in business all of 2019, you have way more leeway in which quarters you could use. So here is that 4 bullets. So make sure you're doing that math correctly. You really want to make sure that you're getting this correct, because if it's not 25% or more, then again, you're not going to get that forgiveness. And the next one that we're going to talk about is the documents and doing the math. So this isn't yet a mistake, but I can see this being a huge mistake, that you're doing the math right now and you're not pulling these reports. So if you're using QuickBooks, your life is way easier. Just pull that profit and loss report and you're going to have it. You could do quarter over quarter and run those numbers really, really quickly. If you're doing this by hand, you want to make sure that you're printing out your bank statements, going through all the gross receipts, doing the math correctly, taking all the notes that you need, even if you're below $150,000 on your loan. Why is that important? Let's go to the application, because at the very top, you do not need to do this right here. Reduction in gross receipts of at least 25%. Yes, you need to have that, but applicants for loans of $150,000 or less may leave blank, but must provide upon or before seeking loan forgiveness or upon SBA request. So you're going to need to have this documentation. So if you're going to do it now and you do qualify, do the math, because if there's something maybe you figured out now that you qualify, maybe you lost those documents in 3, 6, a year down the road and you can't get the forgiveness. So you really want to make sure that when you're doing this math, do it now, write it all out, put it aside, make sure that you have it readily available, skate it into your computer, make sure that you have it so you can submit it. And especially if your lender's asking for it, then you can get it to them as quickly as possible. And it really can't hurt just to submit it to your lender in advance if they're asking for it, because at least you have the documentation ready to go. And maybe you made a mistake and they'll catch it and save you the headache of not getting forgiveness for a loan that you were expecting forgiveness on. So that is very, very important that when you're doing this math, if you're taking the time to do it now, you might as well document, set it aside. And the next mistake that we're going to talk about is the same math, but maybe you could use 2020 numbers. So I've noticed that on some of this information from the SBA, they're talking a lot about 2019 numbers. But if we jump down, I believe it's on page 6 here, that this line right here, we could use either 2019 or 2020 numbers. And a lot of people are probably scratching their head, well, why would I use my 2020 numbers? Aren't my 2019 numbers better? Maybe how you were looking at it, your 2019 numbers were better for profitability, gross receipts, whatever, but your payroll, that is what the PPP second draw is based on, just like the first one. But the first one was only based on 2019 numbers. This could be your 2020 payroll. And in the example I first talked about, maybe you had more staff that you were hiring at lower margins. So even if you were struggling in 2020, maybe your payroll was actually higher. That means you would actually qualify for a bigger second draw than you would the first draw. So take the time to actually look at what payroll was from 2019 and 2020, because maybe it'll give you a little bit of a boost and maybe you'll get a bigger PPP second draw. So look at that closely, make sure it's accurate when you're calculating your 2020 or 2019 numbers. And the last one that I'm going to talk about is going to look at the NAICS code. So most people just browse over this when they're filling their taxes out. I know that's what I usually do when I'm looking at this stuff, because it really doesn't affect anything except the categorization for the IRS. But if you look at your Schedule C, that number will be, or that code will be right here on line B, code entered from instructions. That is the code that you're going to use. So you can't just change that. You need to look at your tax return to make sure it matches up, or it's going to be a huge red flag and possibly cost you some forgiveness and get you into some hot water too. So if we look at this document down here, that the reason you would choose or look for that code very carefully is because if your code starts with a 7.2, then you can do the math multiplied instead of 2.5, you can use 3.5. So multiply by 3.5 if your business in the accommodation and food services sector, NAICS code 7.2. So you really need to make sure that this is accurate, and it even tells you. And the business activity code reported on your most recent IRS Form 1040 Schedule C, line B begins with 7.2. So if it's 7.2, you can use it. If it's not, you cannot. So make sure that you're getting this correct the first time. Again, don't just change your code if that's what your tax return has been saying year after year, and it is not a 7.2. So that could be a huge, huge issue. Now for the last one that I want to talk about, that I have not seen any guidance on, but I could see maybe not being a mistake, but I really would like to see some guidance on how to do the accounting or the math for that reduction of 25%. I've seen a lot of people reach out to me and they've asked, what if I'm at 24.99%? So there's been no guidance on that. So it's really difficult to say. And if you've seen anything out there, let me know in the comments down below. Now, I've read a lot of comments on other blogs, other websites, other posts, And most of the people have said, most of the comments that I've seen have said that they're just not going to lose sleep over it and they're just going to round it to 25%. But this is not clear from the SBA's website or any other guidance that I have seen. Now, if you've seen guidance, let me know in the comments down below so everyone else can see it, and I will definitely repost it if there is clarification on how to calculate that reduction. It's amazing to me how many people have actually reached out saying they're at 24 point whatever, and then they're saying they're going to round up to 25%. But all the documentation just says 25% or greater. So it does not talk about rounding. So it's really unclear of whether or not you can round the 24 point whatever percent. If it's 24.5, does that mean you can round up to 25 and just call it a day? And that means you qualify? Or does that mean when they actually look at your numbers and they calculate 24.5 that they're going to round down? Or maybe they're going to round up. Maybe their round 24.99 does not qualify. So we're just going to have to wait and see on that. But I did want to point that out because there's a lot of people asking about it. I haven't seen guidance on it. If you have, let me know in the comments down below. I'll be sure to pin that comment. If you find the answer, give me a link. Let me know your thoughts as well. If you found it, give me the link. If you have thoughts on it, just let me know in the comments down below. I will only pin it if you give me a link to something that is definitive, that is an actual source, possibly from the SBA, Treasury's, or IRS's website or wherever. Just make sure that you give me the link. And that is 7 mistakes plus that ambiguous one of rounding the 25% reduction. If you've enjoyed this video, have any questions, let me know in the comments down below.